You are listening to chartingwealth.com for Monday, the 2nd of May, 2016. We always start on our 2-day chart, and we always start with IYY. What do we see going on? Well, we do have a trend line, and it is a trend line of lots of down movement. We saw the market starting to hiccup back on the 22nd of April. We had a red open box. Then we had two spinning tops, red spinning tops, followed by a crossover on our moving average convergence divergence, and then a big down on the 29th candle, the 29th 2-day candle. That is the April the 29th. Now, what we have going on is we do have a confirmed crossover going down on our big chart on the total market represented by IYY. When we look at our 4-hour chart, what do we see? Well, we see it crossed over back on the morning of April the 22nd, then sort of slid sideways for a few days, and then we started seeing the trouble occur in the afternoon on the 28th, and then the big roll down on the 29th. So we are in a confirmed down move on both of our charts. Now, as far as getting in safely, how do you safely get in to a market that's already rolled over going down? Well, the safest move is to, of course, wait for a pullback on the 4-hour chart so that it rotates back over going up. And I'm circling, for those that are watching on video, around the 13th of April. It would look something like occurred there, where the charts rolled back over, started moving up, and then moved in the opposite direction to parallel the down moves that we're currently seeing on our 2-day chart. Now, that's the safest way. There are other ways for you to get in on a down move early on. However, those ways can be the more dangerous ways, because there are times when the market will hiccup. It will look as if it's moving in one direction and then roll back over. We saw that happen way back in August of last year, where the market was going up and down and sort of sliding around, and then there was a big drop that we can see on the charts back on August the 24th. So again, you've just got to decide how much risk it is you want to take. The way that we try to do things is we try to trend follow. If you'll follow us every day and do some practicing like we recommend, you'll be able to practice all the moves of the market. You'll be able to learn when to get in when the market's going up, when to get in when the market's going down, when to take maybe more risk than other times. But again, we do all of this with virtual money. We are not a stock calling service. We don't tell you what to do with your money. We ask you to listen to what we train on, practice with us, and then once you get really good at using the kind of training we're talking about, maybe you develop your own technique based on some of the things or all of the things you learn from us, then you can make your own decisions, but not until then. So we had a good strong rotation over going down on our 2-day chart, and immediately followed by the derivative oscillator flipping over, which is always a strong sign. So see how the market takes off on Monday, see if it recovers any of this and pops back over, or maybe we'll get a good roll up on the short chart and a good buy-in on a down move. We will just have to wait and see on that. Now, let's go ahead and go to the SO. Just for the record, the IYY on Friday was down 0.52%, so just a little over 0.5%. The S&P 500, which represents the SPY, which represents the S&P 500, was down 0.54%. Looks very similar to the movements we saw in the IYY. Red open box down on the 22nd, two spinning tops, and then a large down move on the candle on the 29th. Now that candle's not finished yet. That's just the first day of the 2-day candle. So we'll continue to watch that. We do have a crossover going down on the big chart, and the immediately followed by the derivative oscillator flipping over into the red. If we look at the 4-hour chart, what do we see? We see lots of down movement in the morning, followed by some more down movement in the afternoon. Again, rotated over going down the morning of April the 22nd. So we've continued to see the short chart slide sideways for many, many days till it dropped off hard on the morning of the 29th. Now, let's go back to our 2-day chart and let's take a look at the Qs. The Qs has been down for a while. In fact, it crossed over back on the 26th on the 2-day candle, and again, immediately followed by a crossover in the derivative oscillator. Always a good sign. Market continued to move down. We may have to actually draw an even steeper down move on our trend line. Now, the one thing we talk about, if you've not listened to the training we have at chartingwealth.com on trend lines, you need to, because trend lines, if I only had one thing I could use to trade besides my candlesticks, I would use the trend line, because even if I didn't have a derivative oscillator or a MACD, I would be looking at my trend line. Those can be very helpful when they're broken. It tells you lots of things. So we've got a steeper trend line now than we originally had. If we look at the 4-hour chart, we can see on there that the Qs started moving over on the 4-hour chart way back on the 19th. Slid sideways for a while, dropped, slid sideways a little bit, dropped again, and then continued hard down over the last 3 2-day candles. Well, actually, the hard down started back on the 22nd, back about the time that we saw our 2-day chart crossover going down on the 22nd. Those of you who are wondering, when's a good time for me to actually get into a move when the market starts going down? I would urge you to practice this. Whenever you see the market crossover going down hard on the 2-day chart, right at the same time as you see it happening on the 4-hour chart, happens at virtually the same time, you really want to pay attention to that. Now, what we saw originally on the Qs is the crossover occurred on the 4-hour chart many days before. That doesn't give you the ability to actually jump in as cleanly, because you can always over-anticipate on a short chart and get hammered because the big chart doesn't go in that direction. That big down move didn't occur until the 22nd. So for those of us who want to go by our rules and play it safe, we're going to wait for the market to digest some of these losses, roll back over on the short chart, and then that means roll over going up. Maybe we should say roll up. And then roll back over going down. Then we could look at actually getting into a move. That's the safest way to play it. Again, the Qs overall down 0.53% for the day. Lastly, let's take a look at gold. What's gold doing? Well, as you would expect, if the markets start crashing, gold usually goes up. Gold has blown it out over the course of Friday, up 1.94% for the day. It had been getting close for a while to moving over and giving us a good positive up move on the 2-day chart, because it had been going down since the 15th of March and actually had been sliding sideways quite a bit. Finally crossed over, going up, had a confirmed crossover on this 29th candle, the candle for the 29th of April. Crossover going up, strong up move. And if we look at our 4-hour chart, what do we see? We see that there was a crossover going up back on the 28th, the morning of the 28th. Lots of strong movement, finally enough. Big movement on the morning of Friday and in the afternoon, pushing through the Bollinger Bands on both the short and the longer chart, the 4-hour, half-day, and the 2-day charts. So that is where we've ended the week. Gold up strong, 2% just about, and the rest of our indexes down about 0.5%. So continue to pay attention and watch. We have inverse movements, as we should be seeing, the market going down, gold going up. Let's see what Monday holds for us. If you haven't listened already to our weekly review and forecast, get ready for it. You need to know what moved the market this last week, what may be moving it this next week, where we are on our weekly charts, because that's important. Whenever we can have all of our charts moving in the same direction, or at least know where weaknesses or strengths are, That helps you quite a bit. Thanks so much for listening. If you haven't already signed up for our daily newsletter and our weekly, you just go to chartingwealth.com, give us your first name and email address, and you will get them every day the markets are open, plus a link to our How to Read a Stock Chart video and the link to our charting layout at freestockcharts.com. The operative word there is free. Thank you so much for listening to Charting Wealth